Welcome back to learn how to get more cash in your business in 7 days. I'm Alan Davidson, and today's lesson is all about managing the cash trading inflows in your business. By cash trading inflows, I basically mean cash from customers. In the second lesson on income and cash, you need to look at the various options for bringing sales cash into your business. Each business is different, but the principles are the same. Most importantly, you need to have your mindset correct. You need to be in control of the customer relationships. It's easy to let the customers take control because customers don't grow on trees, do they? You should only deal with customers that are prepared to deal on fair terms. I've seen so many businesses that just let customers do what they want. If you accept any customer that has a pulse and a wallet, your business is going to suffer. Only deal with customers that fit the profile you want to deal with. Now, usually the relationship is all about price. Price will link to profit, but the payment date and commitment will equate to cash. So set your terms out clearly to make sure that you and the customer are on the same page. Now, the key terms and conditions are on the screen. So many people overlook this. Your value proposition should be that you give your goods and services in return for a price and a payment date. So many businesses stop at the price and forget the payment date. Remember what I said in the earlier lessons about the difference between profit and cash. Price will link to profit, but the payment date and commitment equates to cash. So set your terms out clearly and make sure both you and the customer are on the same page. You're entering into a business relationship. Terms and conditions are the prenup to help you solve any problems later on in the relationship. You can download our terms and conditions guide on the link below for much more detail. If you remember how your cash cycle number was calculated, it relies on quick payments from customers and keeping the debt down. This in turn relies on an efficient billing system. So how quickly after delivery of a product or service do you bill? And how can you shorten the cycle between product or service delivery and payment? So do you carry significant work in progress? In other words, does your service span a number of weeks? If so, should you consider progress billing on a regular basis? Is this considered routine or best practice in your industry? Remember, you don't have to follow the industry norms. My industry traditionally does lots of work, then bills it and creates a huge bill for the customer, who then take an age to pay, partly because it's a shock and partly because it's a big chunk of their cash and they've essentially got to set aside cash. We don't do it like that. We break it down to small chunks and customers pay monthly, every month, on time, every time. Our debtors days are on average -10, which means we are paid in advance, which is obviously great for our cash flow. A key part of the billing process is the creation of the invoice. Ideally, you will create your invoice directly from your account system. This reduces errors and mistakes massively. And as you know by now, errors and mistakes just cause delays and damage to your brand. I've seen so many errors because of separate invoicing. And the biggest one I ever saw was when an invoice for 142,000 was sent out, but only 42,000 was entered into the accounting system. The customer paid the 42,000 bang on time, but it took 9 months to spot the missing difference, £100,000, which was when we reviewed their systems. Invoicing directly from your accounting system can enable faster payment of your invoices. You can also implement automatic invoice reminders, either through your core accounting software or by subscribing to a payment reminder application. Xero and QuickBooks have this feature, but it needs to be turned on. If you don't know how to do this, you can ask your accountant to turn this on for you. Other great tools are things like Satago and Chaser. Both link to online software and create an automated chasing system for every customer. You can create up to 7 templates and send them progressively, escalating the debt chasing for each debt. It means all invoices are systematically chased, which can drastically improve cash collection. And it relies on the terms and conditions being in place to be able to enforce it all. Having an invoice chasing system can also minimize any invoicing errors. Errors in invoices lead to customer queries and complaints, which can seriously delay payment. Make sure automatic order confirmations are emailed to customers when they order by phone, email or web, as well as payment reminders to radically change the time it takes to get paid. It all sounds very small, but it's massive when it comes to cash. So making it easy for your customers to pay you can not only ensure that you get cash in the bank quicker, but that they actually do business with you. So how easy do you make it for customers to pay you? Your invoices and statements should clearly show all information that you could possibly speed up payments, such as your bank account details, the due date, and the status, whether it's current or overdue. Some people may be limited in their payment methods, so having a selection of efficient and quick ways to pay can put you at the top of the customer's payment list. Using a direct debit option for your customers is a very simple but very efficient way to get the cash in your bank by the due date without any chasing at all. So you can set a direct debit system either with your own bank or other banking apps such as Go Cardless. It's easy to set up, it's cheap to operate, and the added advantage is you know early if there's an issue, and it's all automated. So other than setting up each customer, there's not really much else to do. The example on the screen is from Go Cardless, which is what we use in our firm. We've been using it for several years now, and it's made all the difference when collecting monthly payments. Not everyone can pay you straight away, and some can only pay you by credit card, either a business card or personal card. So you need a way of accepting them. Now, you might be able to use your own bank for credit card transactions, but it's likely to be the most expensive option. Or you can use a linked payment gateway. There are lots of options out there, not just your mainstream banks. Many link direct to your accounting software, and if you set it up correctly, it can save you loads of time. Once the invoices are out with the customers, you need a real-time system to know what's going on. With real-time access to debtors' information such as balances, aging, debtors' dates, total cash locked up, this means you can see the actual figures. You can see the debtors, you can see major overdue customers, everything to help you assess your liquidity. Now, you should also routinely follow up your debtors. The fast money is when it's younger, so less than 30-day customers. And debt has to be managed long before it gets to 30 days. Otherwise, it's going to be tough to get that in. So what's your follow-up process? Is it documented? Who in the organisation is ultimately responsible for the follow-up? All these things need to be in place. Otherwise, you'll end up losing count of who owes what, if they're being chased, any special terms, any special deals, or anything. The other option is, do you provide a small discount for prompt payment? Sometimes this can work, but it needs to be done with caution. You need to build it into your pricing system to ensure it works for your business. It also needs to be enforced. I've seen businesses give prompt payment discounts. The client takes ages to pay and still takes the payment discount. Obviously, that's not what you should be doing. Although you should always be in control of the relationship, some larger organisations still only pay on statements. So you need a system to create automated statements. Statements should carry current 30-day, 60-day and 90-day aging terms. It should always be emailed and sent through the post if required by the accounts department paying. Make sure you include how to pay and your bank details on the statements as well as on the invoice. If you have customers with recurring monthly charges, does your invoicing system allow for automated recurring invoices? Remember the perils of separate, unintegrated invoicing from earlier? It just gets amplified if there's a recurring error. Now, you should always approach overdue debtors with a real intent and not tolerate slow payers. An example of serious intent is every Thursday we send out copies of overdue invoices and highlight overdue tasks in red, e.g. your payment promise. Assign a person in your team, which I mentioned earlier, that takes responsibility for debtor management. Make sure they know your debtor days and debtor reduction targets to help them be more efficient. Now, you may also consider incentives to motivate your team. It depends on your business to help reduce your debtor goals. So mixing your debtor collection processes up for impact can also help. So for example, consistently emailing a client can lose its impact over time. Use some other form, perhaps put it in the post, fax it. I mean, it's a bit out of date now, but you could fax it. Some people still have faxes. They think, oh, the fax has gone off. Or send a paper copy of the statement on red paper. just something different to stop the customer who's become immune to email. However, to cover your back, just in case debtors fall behind on payments or worst case scenario refuse to pay you for services under a contract, you should have a policy in place that escalates debt chasing. There's many solicitors that will charge you a low fee, like £10, to send a threatening letter if required. It's important to remember that as long as your terms are clear and have been agreed in advance, it won't damage the customer relationship. You can also raise claims on the county court. If you need some guidance on that, follow the link below. Another option I've seen in many industries is offering guarantees for payments within terms. Again, this is all part of the value bargain you set up when you make the transaction. Examples are guaranteed to do something by a certain date if payment is received by a certain date. A recruitment agency I deal with offers this. You can swap candidates if you pay on time. Along similar lines as a guarantee, support can be included for on-time payments. No payments, no ongoing support. Again, gives them that little incentive to get your money in your bank, which is what you want. The interest you can charge if another business is late paying for goods or services is called statutory interest. This is 8% plus the Bank of England base rate for business-to-business transactions. So if you have a debt for £10,000, the interest that you could charge would be the Bank of England base rate, 0.5% as it stands at the moment, and 8%, so 8.5%. So if you had a £10,000 debt, you could charge £2.33 a day or £70 a month for any overdue invoices. Now be inventive, and if you have regular customers and a means to contact them, then you could offer vouchers for use later in the year, once trading is back to normal. You could build a story about why you were doing it. That's a win-win for you and your customer. Another option to bring cash in earlier is invoice financing, where you sell your invoice when it's raised to a finance company, for example, Market Finance. The finance house charges you for the privilege dependent on your credit rating. It's useful for instant cash injections if you deal with credit-worthy businesses as customers. And finally, when payment is received by a customer, that is then paid back to the funding company. Some funders require you to sell your entire debtor book to them, but others will allow you to sell invoices one by one. So as you can see, there are many ways to ensure you get paid on time without hassle and without having to do that much yourself. Just by automating your processes, offering different payment options, making this as easy as possible for the customer to pay you, you can be stress-free in knowing that your cash will end up in your bank account. So that's it for today's lesson. I know it was longer than many other videos, but that just goes to show you that there are many options for you out there. And if you need to remind yourself of these options, keep today's email bookmarked so you can rewatch it later. Now that we have covered how to control incoming cash, tomorrow I will talk you through cash flow budgeting and controlling the cash coming out of your business.